Okay, hey everybody. I will just going to wait a couple more minutes to let people get in. Um, I don't I don't have a real big fancy PowerPoint presentation. I just want to get down to it and show you a little bit about Trade Track and Stockwatch. Um, Specifically, these are some of the things, and I do have 4 or 5 slides, but I really just want you to listen to me and watch as I kind of walk through some things. But just in general, it's really important for everybody to understand. It's just important for you as an individual to understand that, like, well, two things. First of all, Stockwatch. This is it's a basically kind of like a list of lists. It is not a stock picking app. It is a stock grouping app. It gets you in the right direction. And I think I've found throughout the years, and I'll go into a little more detail in a sec, but I've found throughout the years that I'm better. There's more than 6,000 stocks traded. And I'm better off when I have just a handful. And it's been tough for me in years gone by when I'll look at some stock that totally took off and I didn't see it, and it would kind of tick me off, like, what am I doing wrong? And that's really how I'd wind up buying high. Like, that was one of my big challenges. Was I'd see something and I'd chase it. I'd chase it far beyond where I should chase it, and I'd wind up losing money. And it's kind of like, okay, wait, I was right on the stock and I still lost money. How did that happen? And I'd wind up doing that again and again. And I think that's just kind of the metamorphosis that a lot of traders have. Are you hearing me okay? And you can throw me an emoji if there's anything at all that I'm saying that kind of resonates with you. Okay, good. Yeah, I mean, this is seriously, it's a common problem when you first start trading. And frankly, look, I've had members. I think I started this almost 20 years ago. It was 2006. I actually started an initial my I don't know if any of you guys were here. Some of you might have been. I started the original iteration of Stock Market Mentor send in 2003, sending out PDF newsletters once a week, telling no stock picks or anything like that. I didn't even really have a website. I literally had a PayPal app and an Excel spreadsheet, and so I'd send out these emails once a week with like a tutorial. Hey, this is how RSI works. This is how it's different than stochastics. This is how Bollinger Bands work, et cetera, et cetera. It was really indicator oriented. And as a little aside, when my mom passed away several years ago, we found among her things a stack of all of my newsletters. She kept every single one from. It was really kind of it really kind of touched me. But anyway, so after about a year and a half of that, I'm serious. I had to quit because I was too successful. In other words, and I didn't have much money, but I had a lot of knowledge. And frankly, it's not the knowledge that you have that makes the difference. It's how you apply that knowledge that's really going to help you. That's really going to help you in your trading. And this is really important for you to remember. I'll say it again. It's not the knowledge that you have that makes the difference. Anybody can learn to trade. I can give you a couple, but read Reminiscences of a Stock Operator. That's one. Read Bill O'Neill's How to Make Money in Stocks. That's two. Read the first two books that Mark Minervini wrote. I forget the name. How to Trade Like a Champion, How to Trade Like a Stock Market Wizard, something like that. Read those 4 books. Read them several times. Bam, you know how to trade. That's it. it's all good. Thank you very much. Now let's go make some millions. But that's really not how it works. You can know how to trade, but whether you do what you know you should be, that's a totally different thing. Um, is this resonating with you at all? How many of you really feel like you know a lot about trading, but for whatever reason, your performance isn't quite living up to what it should be? Um, because that was kind of a big deal for me. And I was trading alone. I A lot of you probably know my story, and the rest of you aren't going to because I'm not going to spend time telling you about it now. Hey, this is my life according to Dan. But suffice it to say that I was in the same boat as most people are. You know, you're kind of I love trading, and you're freaking wandering around lost and in darkness, bumping into trees and rocks and tripping over things and not really knowing what you're doing. Um, I didn't have the first couple of years. Oh gosh, probably about the first 4 or 5 years that I was trading. I didn't really have a set strategy. I actually started off trading options, but in a bull market, all you need to know, there's 3 words that you need to know in a raging bull market like there was in 96 and 97: buy, call, options. And I made a boatload of money doing that. And I really felt like I knew options. And then the market whipsawed, and I realized, no, I didn't really know options. I just knew how to make a lot of money and then give a lot of money back. So that was the strategy that didn't work. Then I was doing other things in options, bull put spreads, and that worked really well too, as long as the market was running higher. But then when the market peaked, and it was, I think, March 14th, 2000, I got absolutely crushed on a bull put spread, because I did not a bull put spread, excuse me, just naked puts, just selling a naked put. And some of you might not know what that is, but let me just say there's a lot of things that you can do naked that are fun, but being selling naked puts is not one of them. And so I absolutely got crushed there. It was a huge, very, very expensive lesson, and it put me out of the market until I literally had to get, I was an attorney at the time, among other things. And I had to get 3 different jobs just to pay back the debts that I had, and then get enough money back to where I could trade again. So I made a lot of mistakes. I think I invented some that you guys probably don't even know about. Um, but ultimately, what I realized is and then I'm day trading for a while. Oh, it's the So's Bandit. You old timers, you know what those are, the So's Bandits. I need a level 2 screen. Right. You need a damn level 2 screen, like a guy with suicidal tendencies needs a loaded gun. So all of these things were things that I tried, and they just really weren't working for me, only except sporadically. And it was literally the kind of thing that I'd make a lot of money, or I'd make a couple good trades, maybe a string of good trades because the market was favorable to that. And I'd really think I knew a lot. And okay, I'm finally getting the hang of it. And then the market would turn, or I would screw something up, and then I'd take a bunch of losses, or maybe one big loss. And then I would get discouraged and feel like I can't do this. I don't know what it, you know what, nobody can beat the market, that kind of thing. Or I guess maybe traders are born, and I'm not a natural born trader. And none of that's true. Is this resonating with you guys at all? Because this was literally where I lived, was in that spot where I didn't really know what was going on. There was so much that I didn't even know that I didn't know. And so I finally, after doing a lot of reading, I've actually donated most of my books because I found that 95% of them are just freaking worthless unless you're really cold and those are the only things you have to burn. But once you know certain things, you got it. Then it's just a function of being able to apply what you know. Trading is actually a simple process. It really is. There are a ton of nuances. And to say like, oh, buy low, sell high, that's kind of stupid. Kind of like, how come the stock went up? Well, there's more buyers than sellers. No, they're not. They're all the same. But the point is, there's a lot of nuance in trading, but it starts with coming up with a strategy that totally works for you. It has to work for you, and other people's strategies, they can be different. They can really be different, a lot different. And so you just need to kind of come up with a strategy that works for you. And I work really hard, and I know Scott does. Scott trades a little different than me, but I work really hard to lay out my strategy, but that might not be your strategy. But I lay out my strategy. This is what you need to know, though. No matter what strategy you have, it really does require what I call smart trading, and that is stock and strategy. M for market. What's the market doing? You have to marry those two together. It has to be an attainable trade. In other words, you have to have seen it before. You can't just say, "Ooh, I think this is going to the moon." No, you have to. It has to be a pattern, a trade that's recognizable to you, to where you can say, "Oh, I've seen this before, and this is what this is typically going to do." This is why you'll see me do envisioning on a lot of stocks, where I'll on a lot of charts, and I just keep them on there to see if I'm right. And if I am right, then it's acting like it should be acting. If I'm wrong, well, that's really important to know too. So anyway, so it has to be attainable, and then with R, you have to, excuse me just a second, I got a barking dog. Shoot the dog. Okay, sorry about that. Anyway, you have to be managing risk. You have to focus on risk first, and then finally you have to track your trades. The tracking your trades, we'll get into some of that today. But the important thing for you to realize about this is, if you're not tracking your trades, you don't really know what you're doing. And I'm going to go ahead and share this screen with you for a second, because I made this fancy PowerPoint that I want you to take a look at. Okay, I'm assuming you can all see my screen here. So the reason that I put this stuff together was because I feel like the most important thing about trading, frankly, it's the first step. The most important thing about trading that you can do is you can get focused. You need to know exactly what the heck you're looking for, and then you need to find it, and then you need to execute it. But also, and this is really important, like, time is money. When I first started trading, guys, I was spending a lot of time looking for stocks, trying to figure out what to trade, how to trade it, and stuff like that. It was a real problem for me. And then I finally kind of figured out that what I need, and I was looking at IBD, and then I signed up for MarketSmith. Actually, even before that, I met Dave Ryan. I was actually executing some trades for him, and when he was still doing a hedge fund, I wasn't working with him, but he was giving me his orders, and I was working for a firm down in San Diego. And so he was calling me up with trades, and I'd execute them. And when I went up to his office to meet with him, he had this like really, really cool looking thing on his screen, and he didn't have 19 screens. He literally had one. And he told me it was WONDA, William O'Neill, like data analysis or something like that. But the acronym was WONDA. And that was the precursor to what Market Surge is now. And it was really, really fascinating. And he told me this is what he used to sort and screen stocks, so he could find just the candidates that fit his strategy, just the candidates that suited him for what he was trying to do. And that was the first time that I'm going, wait a minute, this guy's like a world champion trader, and this is what he does. Maybe I should do that too. And that was and then then I went to work for John Bollinger for a while. I do kind of have a way to kind of get around and worm my way into areas for which I'm totally unqualified for, and then just kind of learn as I go. And working with John was one of those too. But John had the same approach, different scans and screens, but he had the same type of thing where he only wanted to look at stocks that met his original criteria. And then from there, he would filter, he would zoom out, like he would zoom in, I should say, and look at each stock to see which one he was going to trade. Like at that time, there weren't 6,000, there were still thousands. But the whole idea was to get was to get this big funnel, like 6,000 stocks now, and gradually work them down. Like, oh, I only want growth that over the last 3 quarters, or I only want stocks with a lot of institutional accumulation and stuff like that. And then you can narrow your scan if you want until you get like 2 stocks, but I guarantee you it's not going to be the right 2 stocks. You want to just get it down to a manageable list so that you can look at it and say, okay, these are the stocks that have all of the parameters that I want to consider in my trades. They suit me, they fit my style. Now, which one am I going to trade? And you will typically find that you can have a list of I'll show you a list in a little bit, but you can have a list of 20 or 30 stocks or more, but let's say you have a list of 20 or 30 stocks. You can bang through all those charts, and that's really all you want to be doing. Once you get your list down, if it includes fundamentals, then don't look at fundamentals anymore. They're irrelevant. The fundamentals work. Otherwise, it wouldn't be on your list. So screw the fundamentals. Just look at the chart now. It's easy. So then you're going to look at all those stocks. Chances are that not one stock is going to be something that you go like, oh my God, I got to buy that right now. What you're really doing is you're going through this list, finding the ones that you say, okay, this is getting really close. Okay, this isn't, so screw that one. But this is getting really close technically, because you can have the best fundamentals, but if it doesn't have a good chart, you don't want to be in there because the market knows something that you don't. It's got a good chart, but it's got a nice trend. You're looking though for the setup where it's really, really close. And then from that point, you're looking for a trigger like, okay, what has to happen in order for me to buy this stock? Are you guys tracking me on this? These are the things that you have to be, you got to be doing this type of thing. And if you're not, you're really going to have a hard time getting on track. So the idea that I had for Stockwatch was what stocks, like what types of stocks am I looking for? What kind of scans and screens work for me? But then I also kind of had to expand it to, okay, if I'm going to make this available to other people, what are maybe other types of scans or screens that people want to see? So I'll go over those. I'll go over some of those, not all of them, but I'm going to go over some of them in a bit. But the thing that I want you to understand here is this is not a session where I'm going to show you everything about everything. There's a lot of things in Trade Trak and Stockwatch that are really, really cool. If they weren't, I wouldn't have put them in there. So there's a lot of things that are really, really cool, but you can't really sit down and learn them and have them at one time. You're going to have to work with it a little bit. And I think most of you, we had a great response to our campaign last week to get people introduced to this. And I know a lot of you guys are here today, but I did make this available to everybody. So if you had questions, a lot of people had questions about it. So that's really why I'm doing this, frankly, to answer those questions and help anybody out who's not really sure whether they want to take these steps or not. And it's an individual choice. You can trade without it. I did for years. So you can't, I'm going to show you some things, and maybe it'll be just enough to kind of whet your appetite to where you'll say, I could do that. That kind of works for me. So that's really what this is all about. And the thing that's really important for you to remember is, again, like, time is money. And if you're not, if you're just spending all of your time working on finding the right stocks and stuff like that, you're going to really kind of get hammered. You're going to spend a lot of time and you're not going to make much money. In fact, you probably be looking at so many things that you'll wind up losing money because you're always chasing the thing that looks good now, not realizing that you should have bought it just before it started looking good. So if you're struggling or you kind of feel like you should be doing better than you are, it's important for you to understand that, because you don't get paid by the hour, you get paid by your decisions and actions. So think about it. So the better decisions we can make in the shortest period of time, we get paid more. We get paid more per hour. Now, the thing that I really want you to ask yourself, and I ask myself this a lot because I still have mentors. I still have people that I rely on to brainstorm with, to help me with ideas. Scott's one of those guys, frankly. But like, my best efforts have gotten me right where I am right now. And so if I'm not happy, some of the things I'm really happy about, but a lot of other things I'm really not satisfied. But if my best efforts got me there, then I need help. I need somebody else or somebody's else, many people, whatever the case may be, to take me someplace where my mind has not been solid enough to get me going. And so the simple way to put it is, if you want something different, you got to be doing different things. And so if you're struggling right now and you feel like you could be doing, you should be doing better, the solution is not to work harder. If you're sitting here on this session after the market closed, on the West Coast, it's 20 to 2. It's kind of right in the middle of the day. If you don't have anything better to do than to sit here in this session with me, it means that you're totally serious about trading. So you're working plenty hard. If you're back east, what is it? It's almost, what, 5 o'clock? Yeah, it's almost 5 o'clock back east. If you're sitting here, you got better things to do back east too, unless you're really, really serious about this stuff. So just the fact that you're here kind of puts you in the upper echelon of people that are totally willing to work hard. But it's not how hard you work, it's how efficient you work. And so what I want to do here is I'm going to show you some things that are going to help kind of identify the things that you're doing wrong, and then also help you kind of get on the right track and maybe show you some things that you didn't know. So with Trak, it really is, it's a trade tracker, but I know that I talked to Mark Minervini, a good friend of mine, several years ago, when I told him, I think I'm going to build a trade tracking thing like you have, because he has one. His service is like, I think 500, maybe more a month. And he has a trade tracking app. I liked it in some respects, but in others, it didn't quite work for me. So I said, I'm going to build a trade tracking app for my members and for me too. And he goes like, okay, yeah, I think you should. That's great. It really helps. Everybody should be using it. If you're a serious trader, you should be tracking your trades. And then it's like, hey, if you don't measure it, you can't improve it, stuff like that. You've heard me say that a lot because it's true a lot. But he also said, and this is important, guys, he said, but you can't charge very much money for it. You probably just have to give it away. And I said, dude, I ain't gonna give it away. I'm gonna be spending a lot of money on this. And he said, well, the problem that you're gonna face is, he said, most people don't want to track their trades. And the reason they don't want to track their trades is because people don't want to know, these are his words, not mine. People don't want to know how much they suck. They like to trade. They like to play the market. They say they want to make a lot of money, but when it gets right down to it, if they really start looking in the aggregate at how well or how they're doing, they kind of get a little discouraged, or or I should say, and then they start kind of rationalizing a bit and saying, well, I'm too busy. And then, oh, well, I haven't input my trades for a couple weeks. So I'm kind of behind the curve. So, oh, well, I don't have enough time. Or what they do is they'll put in only their good ones. If they have a really bad trade, they'll say, well, crap, I'm not going to put that in. And the thing is, your broker knows any trade that you make, your broker takes that into account. So, he just said, and he's able to see behind the scenes people that are on his website. He knows whether they're tracking their trades or not. And he said, my service is really, really expensive, but still less than half of the people are actually using the Trade Track app. And so that was interesting to me, but I also felt like, you know what, then I just need to do it a little bit differently. First of all, I need to make it affordable. So it's the kind of thing where you're going to look at it and the last thing you're going to say is, well, I'm not really using it that much, so I don't want to use it at all. It's like a really reasonable price. But what I'm hoping is going to happen is you're going to start looking at this stuff. You're going to be putting in your trades and you're going to say like, oh crap, I didn't know that. I guess I do know. I am learning about stuff like how I'm trading, things like that you didn't know before. When I started tracking my trades, I realized a couple things, and I was working with one of my students. I've been coaching him for the last year. More on that at another time. But I've been coaching him for the last year, and we were just kind of summing it up. And one thing I noticed that he was doing is really the same thing that I was doing when I first started trading. And I can just show you. What I was doing is I'd see this uptrending stock like this, and I'd want to buy the stock, but it was kind of trading in a wide zigzaggy range, and I'd want to buy the stock, but what I was looking at was this. I was saying like, okay, this is zigzagging really wide. When it breaks out above the prior high, then that's when I'm going to buy. That's when I'm going to buy this stock. And it it doesn't work out that way, because when a stock is trading in a really, really wide range, I'd like to find something for you. Yeah, I think this will work. I think this will work. Okay. So can you guys see? You can't see squat because I'm not sharing my screen. Okay. Okay, so here's TGTX. It's a pretty good example. So this thing would be trading really, really wide here. And he would look at this type thing, and this is the way I used to trade as well, and say, okay, when this stock, if the stock breaks out above this level here, this is when I'm going to buy. And so I kind of feel like maybe I can make it arithmetic so you get kind of, yeah. Yeah, so you get kind of a better view of what I'm talking about here. I would look at this and say, okay, when the stock breaks out here, this is the thing. I want to buy stocks that are going to new high. I want to buy a breakout. And so I would buy up here, and invariably I'd get this kind of slam. Why? Because the stock had already had to go from down here clear up to here, like 30% from down here to up here, 30% in a matter of like 2 or 3 weeks. That is way too late to be buying a stock. Way too late. The only time you would want to be buying a stock, and listen to me, I'm giving you pearls. The only time you would want to be buying a stock on a breakout like this is, I'll just use the same chart. Um, okay. You'd want to buy a stock like on a breakout like this. Say from here, where this is a volatility squeeze, it's trading in a pretty tight range, and then you could say, okay, if the stock breaks out of here, I'm going to go ahead and buy this stock. You'd probably actually be looking to buy it like here. But this stock now, it didn't have to go very far. Runs like less than 10%, which is not bad. Runs less than 10% before it breaks out. But it's in a flat base, close to the 50-day moving average. This is a kind of a perfect setup for buying a stock that breaks out, buying a breakout. And so then the stock breaks out, little pullback here, but then it's off to the races, right? And then it does whatever it does. I'm not talking about that. But if you're looking at the same setup here and saying, okay, I want to buy a breakout here, this is not the place where you should be buying a breakout now. So should you not buy the stock? No, absolutely you should. You should put it on your watch list. You should set some alerts and say, you know what? If this stock gets back to this trend line, that's when I'm going to buy it. I'm going to take a small position. And then if the stock starts rewarding me and moving higher, I'll go ahead and take some more and start building a position. So I've got a decent position before it gets up to here. And then maybe it'll break out. But if it doesn't, I'll go ahead and take some off the table and make some money. But you're buying it right. Any trade starts with where you buy. It can end with where you buy as well if you buy it wrong. But then on something like this, then where are you putting your stop? You're putting your stop like right under here. Why? Because I'm buying the pullback, waiting to see some evidence that it's going to break out. And then, okay, well, what needs to happen in order for me to think I'm wrong? If it needs to fall below here. Doesn't need to go down to here. Like if you're saying, well, I'll buy the stock here on this little move here, and I'll know I'm wrong if the stock comes down and falls below this level, dude, you got to stop trading. Um, you don't want to do that. You don't need to see a stock fall all the way down here in order for you to get the sense that you're wrong. And so the idea in putting a stop is where is the highest place on the chart that I can put the stock, that I can put the stop, where if that level is hit, my reason for being in the trade is disproven. It's not like I'm a little early or a little late, but if this stock hits this stop, this level, then I'm wrong on the trade. And big winners know how to take losses, a lot of losses, but they're small losses. So this is something that he learned. We were going over it, and he had been using. By the way, he loves Trak. He's been using it for over a year now, and we learned a lot. I just looked at his blotter, at his trades before our session, and I could spot some things immediately that he needed help on, and it wasn't a gob of stuff. It was like what I just mentioned. That's kind of the biggest deal, other than writing some stocks down and not adhering to stops, like not putting in stops, stuff like that. And that'll kill you every time. But so to get back on track with my stuff, when I started trading, you probably heard me tell you about, I was talking to Mark Minervini several years ago about I'm really, really struggling with my trades. And he goes, print out your last charts of your last 20 trades, put a green dot where you bought, put a red dot where you sold, and send them to me. I'll spend about 15 minutes and tell you exactly what you're doing wrong. And I'm thinking like, okay, first of all, I appreciate the 15 minutes, but are you sure? So then I did that, and I didn't even have to get all the way through the 20. I called him up and said, I'm not sending you my charts because I know what I'm doing wrong, and I'm embarrassed to show you. And he goes, I know. And so the thing that I was doing wrong was chasing breakouts. That was my main thing. I was chasing breakouts, but I was also doing the things that my guy was doing that we talked about yesterday. But it really gets down to this: entries. I wasn't taking the best entries. So this is the type of thing that Trak has really helped me has really kind of helped me over the last several years. And then Stockwatch again, this gets me in the right area. And this is the thing for me. We want to be trading where institutions are trading. If you're day trading, that's a whole different issue. That's a whole different class. That's 59-minute trader stuff. In that case, you really don't want to be trading where institutions are trading. You want to be trading where the retail traders are trading, and then squash them like bugs. But for what we're doing here, I want to be where institutions are, but they don't have the courtesy to call me up and say, hey, we're buying Microsoft today. I know there was a downgrade, but we really like it. Or we're buying XYZ today. If that was the case, then I would go ahead and do it too. I love that. But they don't do that. But we can, if we know what they're looking for, we can look for the same things. And at least we can be in the same pond that they're fishing in. And then we just kind of go where the fish are. We go and we look to the chart to see what they're actually doing. And so what I did with Stockwatch is created this thing so I cut my research time down. And this is what you need to know. There's going to be a lot of trades every day that I'm just going to miss. I'm not going to see them. Why? Because it's not where I was looking. You can have the best trade in the world on any given day, and I guarantee you there was a better one that you missed. We want to be consistent in what we're doing, and so what I really want to be thinking about here is you've got to be measuring so you know what's broken. And there's a really cool way. There's an easy way to do this. So we're going to I'm going to show you some trade track stuff. And one of the things I just kind of implemented this is a grade your trade feature where you can go in on any given trade, and I'll probably even make it available on open trades. But right now it's only on after you've closed your trade that you can do this. But you can go on and identify all the different parts of the trade and say, okay, well, how did I do? And it's not for me to grade. It's literally for you to grade yourself so you're self-aware of every single aspect of your trade. And what you'll find after a while is a common thing. And you go, okay, well, now I'm not confused. I might suck in a certain area, but at least I know where to work. And now you've got focused work and you can, you can do that. And so I don't know what just happened there, but screw it. I'm not even going to continue with the PowerPoint. We'll just go to the charts here and to trade track rather than continuing on that way. Are you guys doing okay? Like I said, this is a little bit, I wouldn't say it's, hang on just a second. Okay. I don't have a real fancy thing here. This is really more of an instructional thing than anything else. So I just want to kind of get right to the meat and potatoes of it. And so, yeah, let's just go. We'll see what happens. So this is, I'll just log out here. Okay. So we go to Trade Track, and this is where you'll put in your info. I got a real fancy login there. And this is what you're going to see. Now, we'll just kind of go through it. I like this. One stop triggered. Review current risk in account. Okay, I'll get to that in a little bit. So when I log on, the first thing I see is ALHC. These are open trades that I have in the system. Some of them are phantom. Some of them are real. I'm just using the app here. So I'll look at this, and here it is on the. Okay. So if you guys remember, we were in this and then it got stopped out. And I said, you know what? I'm just going to kind of keep it on the list just to see what happens, just to track it. I wouldn't buy it. I wouldn't be in it. I'm not long this. I wouldn't buy it, but let's just kind of track it and continue on. And so, so this is what happened. Okay. Listening to Dylan crying to get in. from outside. So I look at this and yeah, my stop got hit. So let me see the chart here. Oh, crap. So I had bought right here, wherever my stop was, it's set here. I can literally see it on the chart. And so later on, I'll be able to see whether my stops were good. Were they correct? Were they not correct? Were they too tight? Were they too loose? Stuff like that. And it really does help you get a sense of how you're doing. Like, let's look. And so, like on that, okay, I need to get out of that trade. So my stop was 18.15, right? So I go, oh crap. So I had 36.59 shares. All right. And my stop price was 18.15. Hey, what are all the thumbs down? Come on, guys. It's just a phantom trade here. Okay. So, and then out like a ghost. Okay. And then I can even put a tag in here. Okay. What am I stop hit? Okay. And I can do other things like trade not working if I wanted to, paper trade, cut size at a loss, I suck, um, bad trade, stuff like that. So I can put all these in and I can have okay, hang on. Hey, Scott, I'm in the middle of a webinar. Oh, well, thanks for telling me. No, I appreciate that. Sorry, you guys. I'm a little discombobulated, but thanks for telling me, bro. I appreciate it. Okay, bye. Okay, you can now see my screen. That's what all this stuff was about. Okay, I'm going to go back. I'm going to go back to the beginning. So, um, okay, so I had I'll put this back on. Do I still have this? Did I completely close it? No, I don't. Okay. So I'll go back to here. You guys can see this now, okay? Scott, brother, I appreciate it. I didn't even know you were on. I know you've had a busy day making all this money on crypto. So anyway, so this is what I have as far as open trades go. And this one, now I'm going to go back and look at it again. You can see where I bought it here. Would have been nice to have bought it back there, but no. I was looking at something else, wanted to buy on a little pullback. The stock came up, but then it fell down through the stop. And so I'm stopped out. 5.7 percent loss as far as where it is right now. It'd be a little bit better if I'm stopped out at 18.15. So I'm looking at this. I'm going to close the trade and go like, dang, I sure wish that hadn't happened. So I'll close the trade. And you see where my note was mental health chase. 36.59, 18.15. Bummer for my note. And I can say say anything I want here. Bit high, kept the stop too low, whatever the case may be. So I've got that as a closing journal here, and then I can go through here. Oh, and by the way, you can make your own tags. You don't have to use the ones that were in here. You can go in and create whatever tags you want to be whatever tags you want to have that helps you with your trading. So this is what I've got. I'll go ahead and sell that. I've closed the position. Now I'll go back to open positions, and these are the only ones I have. Now I can go in and look and say, all right, well, I want to review my stops and see how I'm doing. I'm not up a lot, 6-7% or so, but I want to look at my stops here. So I see, oh, okay, well, my current stop is here. As long as this stays up, okay, I'll be fine. Maybe it's even a little bit too high. I don't know, but at least I'm able to look at it. Then I look at Palantir. same thing. And these are all brand new trades, so they haven't really gotten going yet. But I know where my stop is on this, and it's pretty tight. And then the last one, AT&T, if I recall correctly, this is really tight because I wasn't super sure about what I was going to do with this, like just kind of where this thing was. So, does this make sense to you guys? Are you kind of getting? Are you tracking me here on this? Okay. All right. So now let's look at our closed positions. First, well, actually, before we do this, let me go up to the top here because this is the most important grid on the whole on your whole app here. First of all, well, we'll start here on the right. For the last 3 months of trading, I'm going to switch this to the last year. So over the last 12 months of trading, your batting average is 583. So you're profiting on 58% of your trades. That's pretty good, but it's not dispositive because you could be profiting on 58% of your trades, but if your losing trades are bigger than your winning trades, or if you have one or two disasters, you're going to still be losing money even though you're getting on base all the time. But here, the average gain on the winners, remember, batting 583. So the average gain was almost 17%. The average loss is 6%. So the win-loss ratio, and by the way, if you're saying, well, I need to understand what these calcs are, you can look at them right there. You'll understand what the calculation is. And you'll see here the win-loss ratio is just average, sorry, the mouse is so big, average win percentage divided by average loss percentage. Okay, so you're making $1.40 for every buck you're losing, right? Not too bad. But it doesn't tell you how much money you're making. That's adjusted win loss. See, now you've got average win percentage times average win amount. In other words, how much money are you making? And where that really comes in handy is this. You need to be having some kind of format for your position sizes. You want to be able to know, like, okay, my ideal position size is X. So a fraction of that, like half of that is this amount, a quarter of that is that amount. So you need to have some kind of uniformity because if you don't, then what can wind up happening is you're going to be either impulsive and you go, wow, this is really, this is going to be great. I'm all in, got a hunch. I'm buying a big old bunch of this. And then on other trades, you're going to be looking at and saying like, well, I don't know about this. Maybe I'll just take a small position. And that small position may be with a really wide stop because you're getting the can't help it's to where you're going like, this trade really doesn't fit my profile. It doesn't meet anything that I do, but it sure looks good. So maybe I'll just take a shot. This adjusted win-loss ratio is going to help keep you honest. You're going to be able to see whether you are trading in the right size all along. And the idea here is, I should say the ideal is that your positions are the same on the stocks that you make money on and the stocks that you don't, with this exception. As long as you know your fractions, what you'll want to be doing is on stocks that are profitable, on your wins, on the stocks that are rewarding you and telling you, yes, you're right, you're correct on this. On those, you want to be saying, hell yeah, I'm going to buy some more. And then you wait for the next entry point and then the next one. So you build on the ones that are correct. And this is what gives you an adjusted win-loss ratio of multiples, because you want to be making more money on your profits than you're losing on your losses. And then when you combine that with a good batting average, you're in high cotton. But if you have a good adjusted win-loss ratio, you can make a lot of money even with a bad batting average, even if you're only batting 4 out of 10 or even less. So these are numbers that really matter. But what you're really trying to get to is this one, is expectancy. And that is based on these numbers, what can I expect to make on the next trade? Again, based on these numbers, it's a similar, it's kind of exactly the way that casinos keep their lights on. They know what the probabilities are based on a lot of different factors, but they just trade the stats, and they know that if you sit there, the longer you sit there, the more likely you are to be giving them money so they can pay their electricity bill. Similarly, if we get this kind of expectancy, then all things being equal, you should make $3,643.73 on the next trade. Now, will you? Absolutely not. Some you'll make more, some you'll make less. Maybe you'll even lose money. But this is what statistically, based on your performance, this is what you can expect to make. And then the net return here based on this has been about $500,000 over the last year. Now, okay, so the market's been pretty good over the last 12 months. So just keep an eye on these. And now let's change like to the last 6 months and see how this changes. Okay. Even better, not so much here, but my expectancy during this last 6 months is almost 7,000 per trade. Okay. Now, how about the last 3 months, which have been kind of sucky? Okay, over the last 3 months, now I'm down to 2288. The batting average and the gain and the loss ratio is still pretty good. We want a positive expectancy. We want a positive expectancy here, but we also want to see good numbers here. And if this is a little confusing to you, don't worry about it. You'll figure it out. You'll pick it up. And then if you want to, by the way, doesn't this make sense? Because over the last few months, this has been kind of a tough market. But this is also a way where you can be you can literally be tracking your own performance. And you could even say, well, I want to know, how have I been doing? I don't know, from February 15th to today. How have I been doing here? And so then you're tracking that, and you'll see, okay, well, it's been a little bit more of a tough market here. So these are the types of things that I like to look at, and I tell people that I'm coaching. You need to be tracking your results in different time spans to just kind of see how you're progressing. And ideally, what you want to be doing is, as time goes on, you want to be getting better and better numbers. But I want to, let's see, I want to show you a few here. Again, sorry about the delay here. I want to show you a couple things that really that work pretty well here. Yeah, okay, here we go. So I've got a trade here on, I think it's this one. Okay, on MicroStrategy on steroids. So this was put on October of last year, and then closed in November. So it was held about a month, right? So this was a gain about 38 grand. The percentage was 214. So that seems like a pretty good trade, doesn't it, guys? Throw me an emoji, either yes or no. Good trade, bad trade. You tell me. Good trade. Anybody think it was a bad trade? Anybody? One nervous Nelly, one pessimistic guy. There you go. Okay. Bad trade. Okay. This was actually a bad trade. And I'll tell you why. I'll show you why. Let's look at the chart. Okay. Bought it here. Awesome. sold it here. Not so awesome. This thing at one point, and if we go back here, you can look here. Now I'll have to pull this back up. Okay. You'll see here, I made 214, almost 215%, but the maximum profit was almost 400%. What this column tells me is if I had absolutely top ticked this, how much money would I have made? So when you look at this, when you look at just the gain losses, don't fool yourself, man. Look at how much you could have made had you top ticked it. Now, are you ever going to top tick a stock? Yes, you will, once in your life. John Bollinger told me that. He said, you can top tick a stock on a sale one time in your life, but you can top tick it on a buy as many times as you want. And I've done that before, and it's very unpleasant. So, but in this case, when you see this, you go like, okay, well, that was kind of crappy. Like here, for example, on VKTX, the maximum was 231. I got 213. Okay, that's not bad. Here on this one, SMCI, the max was 111. And I got 106. I got to turn off my phone. We got a lot of stuff going on in the house. 111. So we'll look at the chart here. Okay. Now, should I have held on? Yeah. Okay. Woulda, coulda, shoulda. But when I look at this trade, okay, I bought it here and I got out here. I sold this here. Okay. Why did I sell it here? Seriously, think about this. Why did I sell it there? I don't know. I don't know. But isn't this a good thing to be looking at when you see a bunch of things like this, to where you see you got in? Like I would grade this. I would grade this as a really, really good entry. If I really wanted to be if I really wanted to be a monster on this trade, I bought this on an initial kind of breakout that didn't really work. But on the other hand, it didn't really pull back much either. So the buy was good. I think probably the most I was at here was like break even. Okay. And then when this thing moves up on volume, that's when you would want to be adding to that position. I didn't do that. So this is a bad grade for trade management. Ride this thing up, and then for whatever reason, maybe a bad cup of coffee. Maybe I stepped in one of my dog's dog crap out in the back lawn and I was pissed, whatever the case may be. But I sold this here, made a really, really nice gain, a double. But it wasn't a good trade in that respect. Yes, it was awesome, but there was no reason why I couldn't have held on to this stock, or at least held on to some of it. And if we look at what I did here, I just held the stock and then I sold it. And so this is a type of thing where if you see enough of these in your trading records, you're going to realize that your entries are good. Entries are good here, but the holding, the trade management, and then the exit, we need to figure something out. We need to look at this and say, okay, geez, what kind of rule do I need to have? There's something in my system, and that system might be in the brain, but there's something in my system that says, geez, I'm just kind of selling randomly, which is only slightly better than buying randomly. I mean, once you're in a winning trade, the last thing you want to be doing is just selling randomly like, oh, I got a feeling. You need to have some kind of mechanics to keep you in a position long enough. And that's like guardrails on bump, whatever you call them, gutter rails in bowling, where it just keeps your ball in play. So we need to be doing the same thing. So this is the one thing that I would like learn from this, right? So the thing is, we can look at this type of thing, and on any of these closed positions, we can go back, and I'm going to go back to this one. Okay, like this one here. And we can go back and grade this trade. You can do this on all your stocks. Stock selection, I'd give that a 10. Entry timing, I'd give that a 10 as well. Position sizing, um, I don't recall, so I'm just going to give it a 5 just because I feel like it. Stop selection, initially, yeah, I'd say my stop was pretty good because it was pretty tight and I didn't get stopped out, but I'll give it an 8. Trade management, sadly, 1 is the lowest. If I could go negative, I would. So trade management is bad. Exit, bad. And by the way, why is trade management bad? Okay, because the exits down here, that was bad, but I didn't add to this position and I should have. Overall trade grade, and this is just like, how do I feel about the trade? You know, I would say like 6. So then that's my grade on this stock. Now, where this comes into play is if I want to look at um, and I haven't grade. I just kind of put this together, so I haven't really put any real grades on here. But you can go back and look, and you can literally see stock selection, entry, position sizing, stop selection, trade management, exit, overall trade grade, and you can find how many trades I did, and then how many did you grade? Well, I was just lazy. I just did 1. And then you can look at the rest of this stuff. But when you start grading all your trades, something is going to be sticking out. It takes a while for you to see it, but you could wind up, for example, realizing that a lot of your trades you had really, really bad entry timing, or based on your parameters, your position sizing was all over the board. But ultimately, where you want to be, you could say, okay, overall trade grade, great. I look at these columns as the more important ones because, sure, I can look at what my overall trade grade is, but what I really want to see is tendencies like stop selection. Do I have really low grades on this? Do I have high grades, relatively speaking, on entry timing or on stock selection? Those are the things that are going to help me get a sense of where I really am in trading. Is this making sense to you guys? Am I going on too long here? Am I confusing you, or are you all right? Okay. All right. Okay, good. Well, I'm going to keep going then because I got nothing else to do today. Actually, I have a lot of things to do today, but you're the most important part of my day. So now let's look at it this way. I want to add a new trade. So I can go ahead and do it this way. I'll show you something. Like, let's say, who wants to add a trade? Guys, give me, what are you, give me a trade. Somebody tell me one that you like. And I won't say who you are, so I won't embarrass you. Okay, Palantir. Palantir it is. Okay. Okay. Oh, yeah, nice one on the breakout. Okay, so I'm going to buy Palantir. I'll move this off. Palantir at 107.78 is the last trade right here. It's 107.78. So we go Palantir. 107.78. All right. Now, we'll say, like, where's my stop price going to be? On a breakout on something like this, by the way, this will hit a new high, I guarantee it. On this, I say, like, all right, well, this broke out. So if this completely reverses, then I don't want to be long the stock. So the low here is 191 cents. So I'll keep it pretty tight and I'll go like 190, literally right on the money. Um, okay. Now, how many shares am I going to buy? I don't know. Let's see. What do I want my average position size to be? Like maybe 25,000 to start. So I can do it this way. Okay. So I'll buy 232. My dollar risk on this is 1596. My percent risk is 638. Breakout and buy to the moon. Okay. And I'm doing it this way. Now watch what I have on Palantir. Um, I just got, this is the new one. Here's the chart. I've bought it here and I have a current stop here. Now, I'll show you something just so you can, because these always look really tight, but I'm going to have it be a really, really low stop so you can see what this truly will look like once you get a trade that's really cooking. So let's say, don't ever do this at home, kids. Um, let's say the stop is at 80. Okay, so now we've got it at 80. This is what the chart looks like now. You bought it here and your current stop is clear down here. And by the way, one of the things I'm going to have our programmer do, who actually had the audacity to take a vacation with his family. I can't believe it. But I'm going to have him change this to red. I want to see a red dot here as opposed to a green on stops. But what you'll see here on this is as the trade progresses, this line will be the same and it will literally give you a visual of, hey, you know what? Maybe I need to raise my stop. And even as I see this, bar chart here, you could say, well, it looks to me like this could be the low. So maybe I want to keep my stop. Maybe I want to keep it a little bit lower, like at about 88 bucks. And so you can do that. Go back to here. And now you've got a little bit different look. This is a tighter look. Is this working for you guys? Do you get what I'm doing here? So that's kind of cumbersome though, to be literally having to, okay, I want to add a new trade. How many shares do I want to buy? And this and that and the other thing. Well, I've got a different way to do it. We go to the trade calculator. Okay, so now we decide we want to buy some Palantir. Okay, and current account value is 1.3 million. You make yours whatever it is. Okay, and the share price on Palantir is 107.78 now. Okay, now stop price 88 bucks. How many shares am I going to buy? Well, I don't know. How much do I want to risk? Well, I want to risk $25,000 on this trade. I don't know how many damn shares I'm going to buy, but the most I'm going to risk is $25,000. I don't have a maximum trade amount. You could say, well, I only want to put in, and this is dollars, I don't want to be putting in more than I don't know, $200,000, make it $150,000 or something like that. In fact, maybe we can go back here. But this is what I'm doing. Okay, this is my account, share price. This is a stop price based on the chart. This is the dollar amount that I want to risk. Don't want to risk any more than that. Golly gee, what should my position be? Bam. I should be buying 1,264 shares. My stop amount, dollar amount is 1978 below where I'm buying. Position size is 10.5% of my account. And the risk as a percent of equity, meaning if I get stopped out on this, my equity drops about 2%, a little bit less than 2%. How's this for cool? Do you guys like this? And so here's the other thing, though. We're looking at R values for, I'm quote betting, I'm putting $25,000 in play. If I want to get my 25,000 back, I'm risking 25 and I want to make 25. So this goes up to 50. The upside target has to be basically 150 bucks. And so because I'm risking a lot, I need this to go up. I need this to go up a fair amount. If I want a 3R, this has to go up to 167. So this really, I got to get this to where I can see it. This really has to go up a lot, okay? Too much. So what do I do instead? I say, you know what? I need to have a tighter stop. So I'll make this and then watch what happens to the R values here, because this is really what you want. You want at least a 2R trade. If you're putting $1 into play, you want to at least make $2. 3 would be better. But you really want at least 2. Again, I like to think if I can't see 3 on the chart, I'm really hesitant to make the trade. So again, if we're looking at 3R, it has to go to $167. Now, why does it have to go to that? Because the distance between where I'm buying and my stop price is way too wide, like 20%. And so if I'm risking 20% on this trade, I've got to make a boatload of money to make up for that risk. Well, that doesn't work. And so, and again, I'm just in the calculator. So instead, let's say I go back to my original thing, which is if this thing falls below today's open or today's low, which is $100.91, then I'm out of the trade. So now I've got the same calculator here, but instead of it being $88, we'll have it be $100.90. Okay, now watch what happens here. Okay, so now I'm actually able to buy a few more shares. My position size is 30% of my account because I've got such a tight stop, and my risk to equity is about 2% if I get stopped out. Now, I'll get to the R's because that's what we've been talking about, and then I'll show you how this max trade amount works. So percent R's. Now, to get a double, $121. Okay, that's up here. That's right about at a new high, which I expect that's where Palantir is going to run. So that's a 2R. Now, if I want to get 3R, it's got to be up to $128. So now I'm going to look out here on the weekly chart. Can it go up that high? Did I say $128? I'd say it can do that. Okay, and then how about a 4R at 135.30? Okay, this is on the weekly, but if we'll just go back to the daily. So this is the target on these, and I feel pretty confident that I've at least got a 2R going. And what needs to happen is the stock needs to not hit my stop. So as long as this keeps going here, I've got this trade bracketed. I know exactly what I'm doing. And so now, like let's say I want my maximum trade amount to be like, this is way too much in a portfolio, 400, almost $400,000. So that doesn't work for me. Instead, I want to keep it at, I don't know, my max position, I'll keep it at 130, and that's 10%. It's 10% of the account value. So then we'll see what happens here. Now my max position is 130,000. My share size has dropped down a lot. None of this stuff has changed. The only thing that changes really is the amount of shares that I'm buying, and then my position size, 10% of what I decided it would be, max position, entry position is 10%. The risk to the equity, if I get stopped out, is less than 1%. And so now I got to go back and enter all this stuff, right? Wrong. Just do this. Boom. Add new trade. It's right here on add new trade. I can, if I want to, third Palantir trade. I love. Okay. Just that easy. And then bam, it's in the system as well. So I'm trying to make this as easy as possible for you so that you do want to use it. And I have found throughout the last few years, because we've been working on this for a while, hell, there was a lawsuit on this that is, you old guys know what I'm talking about, but I'm not going to perpetuate it. Let's just say that people are weird. But anyway, as I've gone through this over the last few years, this has become really kind of fun for me. But the fun has kind of gone out the window as far as developing this, because each time I make a change, it costs money. But I'm kind of right where I need to be on this. And so with with your reports, so you say, okay, well, I want to know, how am I doing? All right, so we go to these reports and we'll say, this is just over the last year, from January of 2024 to today. All right, so we can see on gain loss, we have from 0 to 2 all the way up to above 40. So the number of gains, I've got 28 gains. The percent is 21.5. And this can be a little confusing. I'll make it easy for you in a second. The number of losses is just 0 from 2 to 2%. In other words, they're basically flat trades. 17 losses, that's 22%. Okay. So we go all the way down here, and I have like 0 big ones. So, but most of them, we have a lot of them here. So I can go down to here. This is the percent return distribution, and see that my biggest loss is in the 6% range. But what I want to do is I want to make this, I want to really go back a lot, because I just want to get more. I just want to get more numbers, and we'll say 0 here. 0 here. So this is just the raw data. What have I done here since March of 2023 till today? Because now I get more numbers. My percent return was 8.22. My dollar return was 3/4 of a mil. My annual return was just 3.82. Now, let's say, and I'll go back down to the bottom in a sec, but let's say I'm looking down here and I'm going like, okay, well, the biggest loss that I've taken, I only took one that was in the, I've lost 14 to 16%, nothing beyond that. And that's pretty good. Maybe a couple of them got away. Most of my gains though, and this is a problem, most of my gains here were in the 0 to 2% range, which means that I had a lot of basically flat trades. Didn't make much, didn't lose much. On those flat trades, I made a little bit more than I lost, but you're likely going to see this kind of curve where it's going to, you want to see this be flat. Like you don't want to see anything over here. And then you're going to see a greater preponderance of trades on the losing side be at smaller percentages. And then you're going to see a lot of your trades right in here. You want to see them a little bit more than 0 to 2%. This might mean you're over trading. You've got stops too tight or something, but you're going to wind up seeing this. It's kind of like a bell curve, up and then down. But then I look at this and say, all right, well, I've had 23 over all that time period. I've had 23 stocks. Thank you, Mara and MicroStrategy and NVIDIA, a few others. I've had 23 stocks, 23 trades that I've made more than 40% on. Okay. That's a lot. I wonder how much that skews my results because, hey, man, $750,000, I'll take that any day. So instead, what I'm going to do is say, you know what? I'm gonna take this away. In fact, let's just see. I've had a few. Let's just say, well, I'll leave this here. Let's just say that my maximum win, my maximum gain would be 30%. So I go up here, maximum loss, I'm going to leave alone. My max gain is 30%. Now this adjusts for that. So it wipes out this big gain here. So now let's see what happens. Okay. Now I'm down to 4.68% return, and I'm down rather than 750,000, I've got 416,000. My annual return is clear down here. So when I look at this and I compare it with the actual, what I see is literally by just wiping out that one trade, I'm now kind of getting my real. It's not just one trade, it's a whole boatload of them. But I'm getting more of a real sense of what I was doing. So what's the moral of the story on this, ladies and gentlemen? The moral of the story is when you're profitable, when you got a good trade going, keep it going, pack it on, make it as big as you possibly can, as long as you're sticking within your parameters, trailing stops, selling fractions into strength, maybe buying it back a little bit if the stock keeps going up. But you really want to work your trades out so that you're really, really maximizing your returns as much as you can on the winners, and on your losers, take those losses really, really quick, because as I say, you can always buy it back. And so, does this make sense to you guys? Are you kind of tracking what I'm doing here? Because this is, to me, like I said, this is really, really cool stuff. One thing, this is just kind of an aside. If you're going back to open positions and you've got 50 of them, don't do that. You know, I'm not going to tell you how many positions to have, but I'll just say that I'll put it this way. If it starts to be a pain in the butt for you to be inputting all your trades, you're probably over trading. Now, if you say, well, I'm just going to put them in once a month or once every couple weeks, that can be tough too. Because we just get busy and then, okay, yeah, crap. You know, I know I said I'd put them in this weekend for the last couple of weeks of the last week, but the kids had soccer practice and, you know, I had a fight with my husband and the dog was sick, whatever, the dog ate my homework, whatever the case may be. And then pretty soon you're way, way, way behind on it. And that really stinks. And so the best way to do it is this. Use this calculator it only takes you a minute to do. Use this calculator, calculate risk, and if it all works for you and you'll get the hang of it, just like boom, add trade and you're done. You can literally do this before you enter the trade, which you probably should be doing anyway. So, okay, I've gone through a lot on Trak. Now, I want to get to Stockwatch, but first, do you guys have any questions here? And again, I apologize for I see all these things. Dude, you're not sharing your screen. You're not sharing your screen. So I'll take any questions that you have before I move on. Scott, are you still here? I didn't think so. Okay. Yes, stop line should be red until it rises above the buy price. Then it should turn green. Mariana, that's a really good idea. That's a really, really good idea. So, yeah, you guys have some good thoughts, some good comments here. So, all right, I'm going to go ahead and go to Stockwatch. Now, with Stockwatch, as I mentioned at the outset, This is something that I want you to be, don't look at it as a stock picking app. Oh, I want to know what stock to buy today. This is a tool to get you in the right neighborhood. And it's pretty darn easy to do. If you say, well, what's this code 33? Like, what's up with that? If you want to, you could just hover over here and you get a sense of what it is, or you can click on here or just click on view list and you'll see it comes down to just a few stocks. What's this? 7 stocks, but you see exactly what is on this list. There's a few things not on this one. There's a few things on a couple of lists that are kind of proprietary stuff, but for the most part, I don't. I'm kind of almost like an open source guy. I think you need to be seeing exactly what you're doing. Technical elements. And what this is showing accelerating revenues, earnings, and profit margins for 3 consecutive quarters. The moving averages are in a bullish alignment. These are stocks that are really, really good stocks to be considering. Would I buy any of them? I don't know. Let's see. But what I'm seeing here is, all right, how close are they to their highs? All right, these are typically going to be negative. They're within, like, the worst one is almost 17% below its high. How about off of its low? All right, these are up well enough off, far enough off the low to where they should be easy to be looking for a trade. And then the 50-day versus the 200-day moving average. In other words, how close are these together? Ideally, love to see them really close together, but any of these are really okay. So just as I look at these columns, it's okay. And then, by the way, price versus 50-day moving average. So these are all pretty close together. But I mentioned this, I think it might have been on Monday's call. I mentioned that if I'm looking at, I was talking to my guy yesterday too. If I'm doing a screen, I don't really look and demand that that the price be above the 50-day moving average, because a lot of times, really, really good stocks, particularly if they're kind of in squeezes a little bit, the price will be below the 50-day moving average. It shouldn't be a lot, but if you require the price to always be above the 50-day moving average, you can miss these little pullback buys and then maybe not even see the stock until it's too late. So I like to see these things. You get the average volume, and then you can, if you want, just kind of go through these and look for charts like, no, thank you, none of these, not really. FNV, okay, that's what I'd expect. Gold, I don't know if that's the entry yet. IIV, NOK, no, thank you. And then PBH. Okay, now does this mean forget about these? No, you can just export them into Excel, just left click, then I open them. It's popping up over here. You can do it. I know you can. Left click here, right click, copy, and then I can go into, let's say I need a new watch list. Code 330242425. Do that. Cut and paste. And there they are here. Now with this, it's pretty easy. I'll go ahead and just take this off the screen. Now I can just kind of bang through them. And then I see them on my shows. Like, this is something I'd be interested in tracking. But the rest of these, FNV, I'd expect that because it's a gold stock. But it kind of gets me a bunch of stocks that I can consider. Now, let's say this is my favorite. It's my favorite list. I'll show you. And I have a list of the ones that are like Dan's favorites, these up here. And there's probably a couple of these that I'm going to take off. They kind of switch around depending on what I'm looking for. And you can see where they were last updated. Karen just updated them. Look at her. She just updated them today. She must have known I was going to do this. So top IPO stocks. What's that about? first 5 years going public. That's when you get the best moves. Tells you exactly what's going on here. And then this is important. This is for your reference. It's not a buy list. Depending on market conditions, some of these stocks might look like crap. They'll remain on the list because of the above mentioned focus. Solid growth fundamentals in a young company. So we've got how many? Just 19 right now. Okay, so what do I want to do? Left, I can scroll down and look at them all this way, but I like my charting software. So, whoops, I don't want that. Oh, I think I can do it CSV. I'm just used to Excel. Okay, yeah, whatever. So, left click, right click, copy. Back to here, watch lists, IPO. Oh, IPO, top IPO stocks. So I'm going to go ahead and just add these. So I right click, paste. It's going to say, do you wanna? And I'll say, yeah. And so it gives me the same ones. Do you know why? Because I've already put these in. But now I can go through really, really quickly and I can do this. I've already done this, but watch the flags here. Because what I did was I went through this beforehand and I flagged the stocks that are interesting to me, stocks that I just kind of want to keep track of. These are all IPOs. This one, like this one, by the way, I'd be looking at this tomorrow. Now, it's low volume and only traded 25,000. But can you guys see how this little pullback to the 40 week moving average? Hang on just a sec. Daily. I got this on a weekly. I'm going to take all of that back because I'm going back to here. Okay. Pretty steep, but you can see the same thing. So I could consider that, except that this is a massively steep sell off. I would just kind of be watching that. But if we go back to Sezzle here, it's something that I want to keep track of. Want to keep track of this. This one, keeping track. Just watch for the flags here. Top, no thanks. June, keep track. Keep track. This one's a nice breakout today. If I'd seen this, I'd probably put this back on the list. IPO is just an ETF. No. This one looks interesting. It's pretty volatile, and you're going to see the IPOs are pretty volatile. So this one, still kind of in a, I don't know what the heck you call this, but it's still just kind of consolidating a bit. LUD, no, not really. No. And then this one, sure. Yeah, this could blast off at any time. PHH, I think I might have had that on the list before, but like this would have been a good trade right there. Again, IPO, perfect IPO strategy, a breakout right above the enthusiasm peak, or you could say the hype peak, whatever. But this was a time to be buying this stock. And by the way, this would have been on the IPO list here. And then finally, this one, Skyline Builders. And so from this list, I've got a handful that I want to keep track of. So then you can go back and start banging this out and see what you could see. But out of all of them, just from doing this, frankly, Merrick's is the one that pops out to me because this has run up. It had a massive volume spike here. Didn't break out, but this is institutional buying. When you got multi-million shares trading, over 6 million shares trading, and the typical average volume is like 1 million, this is institutional buying, and then they've kept going. So my bet is, just like I think Palantir's going higher, my bet is Merrick's kind of off to the races too. In fact, we can kind of end with this. Are you guys doing okay on this? Why don't we end with this? Let me put, I'll put Merrick on as a trade. Okay. Add new trade. No, trade risk calculator. Okay. Merrick's share price 40.68. Okay. Stop price. Where am I going to put the stop? Okay. Now, this could fall back. This could fall back here. That's only 4%. So let me kind of give it a little more room here. I mean, I'm kind of tempted to make it a really, really tight stop, but this is an IPO stock, and so they can still be volatile. I mean, frankly, this thing could come down to 37, even below 37, and still be okay. So why don't I do it this way? Let me get rid of this stuff. If I'm looking at this, why don't I put the stop? We'll just take it clear down. No, I don't want to do that. It's bad modeling. I'll put it below the 20-day moving average. We'll say 37.22. That's about 8%. So we'll make the stop at 37.20. Okay, so 37.20. Okay, what amount of risk do I want to take? On this one, I had 130,000, which was 10%. Why don't we just go with that again? Okay, maximum trade amount. Maybe I don't want 130,000. Maybe and the amount of risk I want to take, the most risk I want to take is $20,000. So I'm willing to risk $20,000 on this. The maximum trade is 130,000. So let me see how many shares I'm going to buy. Okay. I'm going to buy 3,200 shares. And by the way, obviously you can use your own numbers. I'm risking $3.48 per share. My position size is 10%. My risk to my equity is less than 1%. So what do I need to do to get to 3R? In other words, I get paid 3 for 1. So this has to be up to $51. So let me look at this. Now, and again, why does it have to go up to here? Because I've got this stop. I've got like an 8% stop on my, I've got an 8% stop on my, on the position. So can it get up to $51? I'll get rid of this. That's a far piece, man. It's a long way to go. Can it? Yeah, it can. It'll take a while. So is this going to be a day trade? No. Is it going to be a swing trade? Not really. It's going to kind of be a position trade. Now, what can I do if I say, well, that's way too long? Okay, I don't lower my standards as far as the trade. I just raise my stop instead. So I decide, okay, well, 38, if it falls back below yesterday's intraday low of 38.95, so we'll put it at 38.90. If it falls back to here, let me just get rid of all this stuff. No, I'm going to leave it on because I envisioned this and it's kind of just like it's going here. But if this falls back to 38.90, then I'm out. Okay, so I got to go back here. 38.90. Now watch what happens here. Okay, so I'm down a little bit more, but the main thing is what's my R? Now my 3R, my 2R's at 44, my 3R's at 46. So 2R, it's totally doable on this. You can measure it this way. From top to bottom, the channels, we'll say $10, but it's like 23%. So just go up here. Same thing, 23%. You basically get up to 50 bucks. That's $10. And so if you're just using a measured move here, this totally works to get up here. 45, 46, 47. This is absolutely doable on an IPO. This was a big, massive distribution V, a big puke fest down here. Now the institutions are in. They're going to push this stock up. Frankly, from everything we're looking at today, geez, looks like Palantir and Marex. So let's say I like this trade. Now, what do? There it is. IPO Bonanza. Okay. Now we've got this here. We can look at the chart. We see where the stop is. Tight stop, there's the price. And by the way, these are just tight because it's today. You look, if this was put on before, you'd see it back here. But again, I'm going to have them make the stop red. And then as somebody suggested, I'm sorry, I forget your name, like after, and this totally makes sense. After you can put the stop in to where if you're stopped out, you're profitable, that's when it should be green. So if Chris wasn't on vacation with his family, I can't believe anybody does that. You guys know I'm kidding. Once he gets back, that's going to be an easy deal. So if you're stopped out for a loss, it's going to be red. If you're going to be stopped out for a profit, it's going to be green. So I could go on and on and on about this. There's so much more, but I'm not going to. I've been going for almost 2 hours. Do you guys have any other questions? And I think most of you, but probably not all of you, most of you are already, you're already looking at this. You're already using this, or maybe you just got it. But I would just say to you, I would just say give yourself time on this. Don't let it confuse you. I'll hold another one of these probably in a couple weeks to give you a chance to kind of get confused, and then we'll go from there. Yeah, Lois, you're asking. I don't know where Sam asked this question, but it's a really good question. There's a lot of information to remember. Is there an ongoing tutorial that we can reference? Absolutely. Now that I've got this to where it's kind of like almost ready for prime time, I'll always be doing some kind of tweaks to it. But now I'm actually going to be making some tutorials, a series of them that I'll just kind of hang on the website that will just be there for you to be referencing. And I think the way to do that is like really, really discreet. In other words, like one tutorial just on one tutorial just on the trade risk calculator, nothing else, just that. And then another tutorial, maybe like just on this grid up here, or even getting down to one tutorial just on like, what is this adjusted win-loss ratio? What does it mean? How's it different than this? And then like maybe these three: win-loss ratio, adjusted win-loss ratio, and then expectancy. Because really, this really is truly what matters the most. And if this is ever negative for you, if it's red instead of green, then you need to stop what you're doing immediately. Like just stop trading and figure it out. Because if you can expect to lose money on the next trade based on what you're doing now, that's not why we trade. So you can figure it out. But by the way, if you're not tracking your trades, you don't know. You don't know what your expectancy is. So it's just really important to get this stuff nailed down. But I will be doing a series of tutorials. I don't think I'm not always going to make them these live workshops or these live sessions, because frankly, I think the quality can be better. Maybe not as fun for me, but the quality can be better if I'm just doing a typical video on it so that it's in reference. So does that kind of answer your question for you? Somebody asked, where do you export the watch list to if you don't have TC2000? Any trading platform you have, if you have Fidelity or Thinkorswim, or you can import watch. You can take this file, export it to Excel like I've done there, and you can import a file to virtually any trading platform that you use that allows you to create watch lists, which I think all of them that are worth trading on do. So you can definitely do that. Now, adding the 8-day EMA, I'll look at that and see. I have to think about that. I don't want to muddy him up too much, Mark, but that's certainly something I can look at, especially since Scott uses the 8-day EMA. Okay, this is an important one. Is there a way to trade track paper trades and real money separately? Why, yes. Preview of coming attractions. Right now, um, right now we only have you can only have like one account. That's just the way it was programmed. But I'm going to be set. We just haven't had the time to program it. You are going to be able to select and have like another account, because I think that's pretty important to be. And some of you that have like long-term portfolios, but then also you're trading shorter term, you want to be able to separate those out, because if you don't, the numbers are all going to be different. Like, hey, I made a 120% on this trade. That's awesome. Yeah, you held the damn thing for 3 years. And then like, oh, but I only made 18% on this. Yeah, you held it for 3 days. So you don't really get these honest numbers. But if you've got a theme for your portfolio or for your trading account, that's when you can get a real sense of what your numbers are. So that's going to be a priority to make multiple accounts for you to have. And I would definitely recommend having a paper trading account and having a real account, or just having a paper trading account. Like, you don't have to trade real money to get the benefit out of this. You just have to input it and then look at what your numbers are. In fact, I would even say this: if you're really, really struggling and you're losing money, you're really having a hard time making money, then let's kind of back into this a little bit. If you're having a hard time making money, or maybe you're losing money now, okay, can you expect to make a lot of money over the next month, or over the next 2, 3 months, 4 months, 6 months? Can you expect to make a lot of money? Answer: no, because you're struggling now. It doesn't mean that ultimately you're not going to turn into the world champion trader, but for now, you're not making money. You're trying like hell. You're really working hard. You're trying to do everything right, and you still can't do it. Like I said at the outset, you can know everything about trading. That doesn't matter. It's how you apply the knowledge that you have that's going to help you make money and going to help you be a success in trading. So, but let's say you're in that boat. Okay, well, this is where Trade Track totally helps you. But you have to input every single trade, because I've paper traded before in years gone by and it didn't work worth a damn. You know why? Because the stock would go down, it would hit what my stop was, and I'd go, well, it's just paper trading. Let's see what happens. Stock goes back up and rewards me on paper. So what have I learned? I've learned that stops don't matter, that if you just hold a stock, sooner or later it's going to come up and you're going to make money. And that, my friend, is how you get a new job at the 7-Eleven on the midnight shift, changing out that really, really bad coffee for criminals and gangbangers and truck drivers. So you don't want to be that guy. But if you just want a paper trade, if you're doing this and really, really applying yourself diligently, number one, you're going to learn a lot about how you're actually trading. You're going to learn a lot about your own mindset. And ultimately, you're going to gain the confidence to say, okay, I can now start putting my money in play. Now I can start actually focusing on making money, because not only have I learned a lot about myself, not only have I learned a lot about trading, but I've also learned how my mind works without it costing me any money. And your whole idea for this is, guys, you got to be a rules-based trader. If you trade according to your rules, you're never going to throw a gutter ball. Those guardrails are always up. You're never going to drive off the road if you're trading according to your rules. You got to have the rules, because if you don't, then the only thing between you and a really bad decision is your emotions. And I don't know about you, I'm an emotional guy. Sometimes I got to take medication for it. But the one way that I keep myself straight in trading, whereas I used to get really emotional, and I'm a gunslinger, and I'm either dying on the vine or I'm shooting the lights out, one or the other. And sometimes it would be like from Tuesday to Wednesday. But the only way that I got off of that and onto a really, really good track is to literally have rules for everything and tweak them every once in a while. like, oh crap, well, that's not, maybe I should try this, or the market's changed. So maybe I should be taking smaller positions, or I should be doing this or that. You can be doing that with Trade Track. Guys, I didn't make this unattainable. I actually made this my whole goal for this, seriously. My goal for this was to make it so accessible to you. This is the Catholic in me. My goal here was to make this so accessible to you that you would feel guilty if you weren't tracking your trades. So don't feel guilty. Track your trades. I will be doing tutorials on this and on Stockwatch as well. And I'll also be tweaking some things on Stockwatch. I'm still kind of dialing a few things in. I had asked people that were using it, hey, do you guys think maybe I have too many? Maybe I have too many lists because I got a bunch. And a couple a couple people said, no, 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 I like all the lists. I like going through them. One guy even he's a total gearhead, a total engineer, spreadsheet freak. He downloads them all. He exports all the lists onto Excel, and then he sorts them out. And so then he just looks at the stocks that are on that are the most frequent, like that have the most hits on various lists. And I've said, not really sure that that works for you because they could be on lists for different reasons. But he's kind of insisted on that, and I've looked at, I've looked at them, and it kind of works. But so I've kind of split the baby, so to speak. Tip of that to King Solomon, where I have my favorites. And these are just, again, my favorites. But so I give you guys a big shopping aisle where you can go down and pick what you want, and you get explanations of all of them. But then you'll just kind of see the ones that I'm looking at. And the one thing that I would suggest you do is when you first start using it, go ahead and look at all of them. Just go ahead and review them, see what you see. And again, keep in mind, these are stock list makers. They're not stock pick things where, oh, it's on the list, I'm going to buy it. You have to get the right entry that suits your particular trading strategy. So you can do that. And I know this is going to work out real well for you. So somebody asked, is there a way to trade track? Yeah, okay, paper trades. Somebody wants to know, you want to know, like, can you get them separately? Can you either just get Trade Track or just get Stockwatch? Yeah, absolutely. You can do that. And you can reach out to Karen about that, or however you want to do it. I'm making it easy for you to give me your money. That's the first rule of business. Okay, yeah, Peter, we'll get into that at another time. How's my conversion to TradingView going? I'm actually liking it. I'm using it a lot. There's just a few other things that I've got to. There's a few other things that I need to kind of get a handle on, and also I'm using OBS Studio as opposed to Zoom for my strategy sessions and stuff like that. For the most part, that's what Scott uses, but Scott's like almost 30 years younger than me, so he should be a higher tech guy than me, but I can only learn like so much tech at one time. So I'll get there. A couple, yeah, it's a good, just got a few questions here. Can you help figure out Can this help figure out our preferred trading strategy, like buy and hold, trend trade, swing trade, etc., so we're not all over the map? Absolutely, Joe. Again, the question is, can Trade Track help you figure out like what's your preferred trading strategy? And the way you can do that is on that trade tag, that trade tag. Feature. I'm trying to. Okay. Yeah, I'm going to share the screen again so you can see it because this is a good question. Okay. Um, so right here on your trade, I've already entered this. You guys can see my screen, right? Why, yes, you can. So then you can go here and like, okay, well, this is a swing trade, or this is this, or this is that. And by the way, you can do this. Let me see, where am I? I even kind of forget some of the stuff. I've been working on it so long. Okay, so you can add. These are all the different things that I have. So I don't care about 50-day MA. Very good trade tag for Bob. That's for something else. Um, and so if you want to add tag, you go like, okay, this is a swing trade. Okay, this is a buy and hold. This is a random trade that I'll lose on. You can make any of these things that you want and then just hit submit, and then you're good to go. Okay, so it won't let me be a smartass on this. Anyway, so that's kind of how you do this. I'll just say random trade. And seriously, guys, if you're going to be using this, have something like this, random trade. And then you know what? You can be undisciplined and silly and stupid and all that, but at least you're holding yourself to account. Okay, I know this is a discretionary trade. It's a bad trade. I know I shouldn't take it, but I got the bad case of the can't help it. So I'm going to go ahead and do it, and I'm going to tag it as a random trade. And you know what? If you got the can't help it's like that, buy a share, risk $100, whatever it is. Go ahead and make that trade. And I think that you'll find after a while, you're going to learn some things. And again, it ain't what you know, it's whether you're using it. And so I think that's just really, really important. Um, so, yeah, you can also just use tags for paper trade. Yeah, though it would throw off your win loss. So I'll leave you with this, like the most important two things that are really important for you to know. Number one, I'm going to be doing a series of tutorials to really help support this, because you guys are here now. Well, we're going to have more and more people getting this all the time, because it's really, really important. And I'm going to be telling everybody, guys, if you're not on Trade Trak, do it. I'm making it easy for you. It's not going to break the bank. You just don't go to Starbucks for a couple times each month. But the point is, I don't expect everybody to go back and watch this video. So I want to have a bunch of videos in a library to where if you have questions, all you have to do is click and get the answer. So that's important. And then the other thing is, again, as soon as Chris gets back, I'm going to say, dude, we got to spend some time and create multiple accounts so people can paper trade, or so they can manage long and short term accounts. So does that work for you guys? Everybody okay? Throw me some like hearts or whatever. Hopefully no dog crap. I'd appreciate it, but that's okay. I'm just a sensitive guy that way. So, okay. So you guys happy? Does this seem like maybe it's something that might help you make a little bit of money? Because it sure has helped me make money. And what it's also done is, if I have a trade that doesn't work, I'm held accountable for it. And so what I find is I'm making fewer mistakes, and we all make mistakes. The best trader in the world, if they're honest, and great traders have to be honest, they have to be, because otherwise they wouldn't be great traders, because they're, your biggest victim is lying to yourself. But the best trader in the world will tell you, I make mistakes all the time. I just make really, really small ones. And so that's what this is. That's what this is all about. And guys, okay, this is silly, but I'm going to tell you the truth. Somebody just asked, what's the price again? And I honestly don't know. I know that we had a package, we had a bundle that is $80 a month for both, and that's that we ended that on Easter, but then I decided to extend it because we had a lot of people We had a lot of people that were that said, well, I have questions. And so I extended it. So you can, I'm looking through my texts with Karen because I think I asked her. Um, I think they're like $55 or something, um, something like that. So if you've got questions about it, and again, this was just an instructional thing. It's not it's really not meant to be a sales thing. Like most of you guys have already bought, so I don't really have to sell you anything. Um, but let's see, you go to Trade Track, pricing. Yeah, there we go. Wow, I got a lot of stuff going on here. 55 a month if you're a Stock Market Mentor member, which I think all of you are, and 69 if you're not, and you've got a free you've got a trial on that. I think you got to pay $7, but maybe not. Anyway, and then so you just go here and do your deal, and then um, you can also add Stockwatch, and I think Stockwatch is $50. Might be I think it's around $50, and I don't actually know why I priced Trade Track higher than Stockwatch. I mean, it's more valuable. I'll tell you that. You go ahead and pick your own stocks. But anyway, that's what it is. But I'll tell you what I'm going to do since you're here. I'm going to just tell Karen to extend that $80 bundle. I'm just going to tell her to go ahead and extend that. Um, it's that's really, really low. So God, I feel like I'm on an infomercial or something. But wait, there's more. Hi, I'm Mike Lindell at My Pillow. Um, you know what? I'm gonna have this end tomorrow because it's should have ended it before, but I just couldn't do this. I couldn't do this video. I couldn't do this session before today because I had a lot of conflicts. So we're just going to end this tomorrow. If you haven't signed up yet, go ahead and do this. And by the way, so you know, maybe this is too much information, but I'm being honest with you. When I give this is all just about honesty and credibility and respect to you. And I want to end it here. Respect for you. If we give a deadline like, hey, it ends on midnight at such and such, I really do want it to end on midnight. I'm not the kind of guy that goes, oh, it ends on midnight. And then the next day going, oh, we get so much demand, I'm going to extend it and this and that. Like most of the time, that's just bullshit stuff. We've had to do that before, but it's literally been a legitimate reason like this. But I know what I'll get if I don't extend it to some extent. People are going to be emailing Karen and saying, I watched it, or I watched it this morning, or is it too late? Stuff like that. So I'm just going to say tomorrow by midnight, by Eastern time tomorrow, we're just going to go back to the regular price. And I'm going to make sure Karen knows that. And we may or may not send out an email. I don't know. I haven't decided yet. So we'll just say, I'm glad you guys are here. And that's all I got for you. Any other things? You all good? Everybody's been sticking around, which I really appreciate. But ladies and germs, I think it's time. What is the Stockwatch website? We do have one of those, but as you can see, I haven't really been too involved in that stuff, which is a good thing. I've told I've told our people. I said I only want to be doing stuff. I'm just I've I've told our people I only want to be doing stuff that only I can do. If there's anything else, if there's anything else that um, if there's anything else that somebody else can do, then they need to do it because I'm tired of all this crap and I just want to kind of be me. And so that's what we're doing. I just happen to be able to find this stockwatch.tradetrack.com. And so you can see this, get the offer. Yeah, 80 bucks. This is the bundle. So if you're going to do this, do it now. That's all I'll say. Because I think this was priced too low, but here's the thing. When you're starting a new product, you got to be rewarding the people that are in first. And then that's the foundation. And by the way, I'm gonna make a proposition for you. You can be helping me out with this. If you give me some, if you like it, if you don't like it, don't BS me. Seriously. But if you like this stuff, if you can give me a review, a testimonial, whatever you want to call it, then I can use that, and you would be doing me a favor in return for a pretty good initial price on this. And this isn't something that I'm going to raise. Hey, thanks for your 80, but now it's going to cost such and such. You're just in as long as you're a subscriber here. Whatever I've raised the price to doesn't apply to you. So it just sticks at this rate. But if you'll give me some testimonials, but only if you like it, don't make stuff up, then that'll help me out. And we'll call it like kind of the quid pro quo, so to speak. So, okay. Yeah. What's the best way to send me product feedback or questions? Yeah, not in the chats, because like I've cut and pasted this, but a lot of times they just go away. You can do it in the trading forums, but the best way to do it, and thanks for asking, Joe, send an email to Karen at stockmarketmentor.com. If you send her an email, she definitely, I don't see all my emails, I get a ton, but I definitely see the feedback, positive and negative. So if you would do that, send it to her. I would really, really appreciate it. Okay. All right, guys. This went on way too long. I'm way past my workout. I'm trying to become a little more fit, and that's always a challenge with spinal surgery and a knee replacement, but steady by jerks, and I am tracking my workouts. So, all right, guys, I will see you